Fundamentals of Partnership Firm, Part 2. Welcome to Shasha's virtual classroom. Previous class, we had discussed all these concepts like recommended books for CBSE, ISC, accounting for partnership firms, fundamentals. So these are again points of focus to concentrate, understand, remember and learn by heart. Remember, this is not just to see and forget. It is something you have to focus, concentrate, understand, remember and learn by heart. You have to keep it, otherwise you have to struggle a lot. It will take a lot of time for you to learn all these things over a period of time. What are you supposed to learn in this lesson? Partnership firm, legal framework, provisions in case of partnership deed, liabilities of partners, appropriation of profit, charge against profit, interest on loan, treatment of loan, interest on loan by firm to the partner, treatment of advance and interest, rent paid or payable to a partner, manager's commission, distribution of available profit, divisible profit, calculation of amount transferred to reserve account, journal entries, appropriations, list of important accounts, importance of illustrations, important questions for practice. So all these we had discussed in the next previous class, and I had told you that we will be discussing this in the next class. So particularly this, now we are going to learn all this. So methods of maintaining capital accounts, concept of drawings, interest on capital, interest on drawings, past adjustments, guarantee of profit. So all these concepts we are going to learn now. Accounting for partnership firm, chapter 1, part 2. So just take some time to just try to work out this problem. Maybe 2-3 minutes you should be able to work out this. Maybe take the screenshot of this question and try working out the problem on your own. Commission payable to partner. This is something we had missed out in the previous class. So sometimes commission payable to as a partner of net sales. Sometimes it will be mentioned that a partner is payable. A commission is payable to a partner as a percentage of net sales. So calculation is somewhat easy. They would have given net sales, on that you have to just calculate the percentage. Commission payable as a percentage of net profit or divisible profit before charging commission. So they would have given profit and loss value, and they would have given some appropriations and all. So basically what you have to do, from the profit and loss you have to take out all the appropriations, whatever is remaining. So that is what is divisible profit. On that you have to calculate. So somewhat okay, because you have to first calculate divisible profit and then you have to calculate percentage of that. So then one more thing is commission payable as a percentage of net profit or distributable profit after charging commission. This is something weird, like after something different, sounds something different after charging commission. After is somewhat very careful calculation, like something you have to add percentage again divided by percentage plus 100. Suppose if the percentage they have given is 10%, so you have to do 10, you have to first calculate the amount, that is divisible profit you have to calculate, then into 10 upon 110 you have to do. Suppose if the rate of commission is 10, then you have to do 10 upon 110. So it again varies from one question to another. The percentage may be 10%, 20%, 5%, 9%, whatever. So this is somewhat technical calculation, so remember this. So it is simple thing, but a lot of students mess out. So because of this they easily lose marks. So this article has come in Times of India, which says that calculator is allowed for class 12 CBSE. So big relief for the students. Methods of maintaining capital accounts. There are two methods of maintaining capital accounts. Basically a firm maintains capital accounts, right, of the partners. So there are two methods. Either they can maintain fixed capital account method, or they can maintain under fluctuating capital account method. So what happens in fixed capital account method, they will maintain two accounts, that is capital account and current account. So fluctuating capital account method, they will have only one account for all items. So fixed capital accounts method, what happens in fixed capital account method is two accounts for each partner are maintained. So how many partners are there, whether 2, 3, 4, whatever. So two accounts for each partner are maintained. So one is capital account and one is current account. So capital account which has only capital introduced, additional capital and specified capital withdrawn. So if some capital is withdrawn, so even that will be that will go to capital account. See, remember, capital withdrawn is different from drawings. So lot of students get confused with confuse themselves with capital withdrawal with drawings. So drawings is different, capital withdrawal is different. So that is why I have said specified capital withdrawn. So they would have mentioned it would have been mentioned that the partner has withdrawn capital, so it will be mentioned. So don't get confused, because drawings is different, capital withdrawal is different. So current account contains transactions other than capital, such as drawings against profit. See, drawings against profit is actual drawings. Okay, so interest on drawings, so share of loss, interest on capital, remuneration, share of divisible profit, all these things. So drawings against profit, interest on drawings, share of loss, interest on capital, remuneration, salary, commission, whatever, share of divisible profit, all these things should be debited or credited to current account. So basically, drawings against profit, interest on drawings will be debited, share of loss also will be debited, interest on capital, remuneration, share of divisible profit will be credited. Simple. So his or her entitlements or amounts at his or her advantage, like interest on capital, remuneration, share of profit, which he or she should receive, are always credited. So you can remember this in two ways. So, and the amount withdrawn which he or she has taken to pay back and interest thereon, always debited to his or her current accounts only. So you should not debit or credit to capital account. Carefully, if you are following fixed capital account method, you have to debit or credit all these items only to current account. So either you can remember this way, what will be credited, what will be debited, whatever is at his or her advantage, like interest on capital, remuneration, the capital itself, and share of profit and all will be credited, or it will come on the right side. So whatever is at his disadvantage, which he or she has taken, the amounts withdrawn, which she has withdrawn, and which she has taken back, which she has to repay, interest thereon, interest on drawings, are all debited. So it will be on the left side. So be careful. So all these things will go to current account. So either you can remember this way, or you remember in the debit aspect, credit aspect, debit the receiver, credit the giver, that particular aspect, because capital accounts are personal accounts. You have to follow debit the receiver, credit the giver concept, which you have already studied in class 11. Fluctuating capital account method. Only one common account for each partner is maintained. So only one account, not two accounts. Earlier, here we used to maintain two accounts, capital account and current account, but here we will maintain only one common account for each partner. Obviously, that is capital account, which has only, so capital account which has only capital introduced, additional capital and specified capital withdrawal, and also, see, remember, also capital account itself contains transactions other than capital also, such as drawings against profit, interest on drawings, share of loss, interest on capital, remuneration, salary or commission, share of divisible profit, all these things. So debit and credit aspect will be same. So his or her entitlements or amounts at his advantage, like capital, additional capital introduced, interest on capital, remuneration, share of profit, which he or she should receive back from firm, are always credited, and the amounts withdrawn which he or she has taken to pay back and interest thereon are always debited to his or her capital account. So remember this, or you remember in debit and credit aspect. Caution to use capital accounts when passing entries. Remember that either capital accounts are debited or credited, or current accounts for transactions related to partners. So transactions related to partners will be entered in capital accounts, right? As far as capital is concerned, the amounts are always debited or credited to capital account, whichever method is followed. See, if the entries related to capital, additional capital, capital withdrawn, will always go to capital account itself, whether it is fluctuating capital method, whether they are following, whether the partners are following, whether the firm is following a fluctuating capital method or fixed capital method. But what is the difference? Amounts other than capital accounts, other than capital accounts means capital, additional capital, capital withdrawn, other than that have to be carefully passed through, should always be passed through current account if fixed capital account method is followed. But see what happens, a lot of students, they instead of writing current account, they will write capital account. So journal entries, lot of journal entries will come, so where you will be asked to pass journal entries. So in those journal entries, you are supposed to write either debit or credit, capital account or current account. When current account, if fixed capital method, if fixed capital account, if fixed capital method is followed, then you have to debit or credit current account, but not relevant at all. So that is, all amounts are passed through capital accounts if fluctuating capital method is followed, because only one account, so you'll have to dump everything. So whether it is capital, interest, drawings, interest, profit, salary, whatever, you have to dump in only one account. so it doesn't make any difference. So particularly you have to be very careful passing entries for either current account or capital account. So a lot of students mess out here, and because of that they will easily lose marks. And remember, little drops of water makes a mighty ocean. Really small mistakes, you will lose one mark, so they will add up to around 15-20 marks, then you are gone. That's all. So we have to be very careful. So instead of passing away all 1 year, or after some time if you realize all this, then there is no point. So focus from now itself. So this is very important aspect. Be careful in passing the entries. This is very important focus. Okay, so very important. Lot of students commit mistake here, so you have to be very careful in this. How to identify the capital account method followed? Capital account or current account is to be carefully debited or credited if fixed capital method and fluctuating capital method is followed respectively. So if fixed capital account or current account is to be carefully debited or credited if fixed capital method and fluctuating capital method is followed respectively. Okay, so be careful. So this is very important sentence. So again, in the absence of any indication, suppose it is not clear whether the firm is following fixed capital account method or fluctuating capital method. If there is no indication, in the absence of any indication, instruction or information, so you are not able to make out whether the firm is following fixed capital account method or fluctuating capital method. There is no indication, they have not told anything. So then by default it is assumed that fluctuating capital method is followed for maintaining the partner's capital accounts. But care should be taken to ensure that. So you have to carefully see that. You have to ensure yourself. Simply do not jump to solve the problems thinking it is fluctuating capital. Not by not reading the problem carefully. You have to be very careful. Okay, so because this has very relevance. It is very important aspect. Why I will tell you. We will just understand here. Interest on capital. See, interest on capital is normally calculated on beginning of the year, right? So from the beginning, on the opening balance we calculate interest on capital. So accordingly capital will change. Capital will be different if the firm is following fluctuating capital method and if the firm is following fixed capital account method. So basically the opening capital will be different for both the under both the methods. So that is why this is very important. So very important distinction. Interest on capital is an appropriation of profit. It is allowed only if both the following conditions are satisfied. Remember, only if both the following conditions are satisfied. The partnership deed allows it, or the partners have agreed, and the firm has earned profit during the year or has sufficient distributable profit. So it is a collective condition. It is inclusive condition. Both the conditions should be satisfied. It is allowed for the period capital remains in business. Okay, so interest on capital is allowed for the period capital remains in business. Suppose at the beginning of the year, if the capital was 1 lakh, so you have to calculate interest on capital for 1 lakh. So after 6 months, if additional capital of another 1 lakh was introduced, then you have to calculate interest for the additional capital also. Then again after 3 months, if additional capital is introduced, or after if it is withdrawn, so accordingly you have to calculate. So be careful in calculating the profit, interest on capital. So it is allowed for the period capital remains in business. So that is why interest on withdrawal of capital doesn't arise at all. So only interest on capital is because it is allowed for the period capital remains in business. So if interest on capital is allowed or paid whether the firms earn profit or incurs loss during that, it is a charge against profit and is transferred to debit or profit and loss account. So sometimes the problem will say that interest on capital is allowed or paid, should be allowed or paid whether the firm earns profit or incurs loss. See, normally you know that we are not supposed to pay interest on capital if the firm is not earned as if sufficient profit or if the firm incurs loss. But if the question says if it is an agreement that it has to be paid, then it is a charge against profit. It should be considered like any other expense and is transferred to debit of profit and loss account, not to profit and loss appropriation. Again, lot of students commit mistake here. Even when they have to read the question very carefully. What they will do is they will read the question in a hurry and they will put this into profit and loss appropriation account. So easily they will lose marks. So very important. Okay, so just remember that. So interest on capital, salary and commission to partners is only allowed to the amount of available distributable profits only, this being appropriation of profit. So only to the extent amount available distributable profits only. So they cannot give more than, so you cannot convert profit into loss. So simply that is what it means. by dumping interest on capital, salaries, commission to partners, you cannot convert profit into loss. So it should be, if only, it should be distributable only to the extent of distributable profits only. So it cannot exceed the, you cannot convert profit and loss account into profit and loss into loss. You cannot convert profit into loss by giving all the appropriations. This is a very careful thing. A lot of students commit this mistake, so be careful again. When interest on capital and salary is an appropriation but profit is not sufficient. So what happens when interest on capital, salary, commission, etc. Is inadequate, okay, is inadequate for allowing all this. So what we'll do then, the aggregate amount is calculated for each partner. Then what you have to do, say, let us say interest on capital, salary, commission is 2 lakh, whereas the profit available is only 1 lakh. So what you will do in that case, so you have to add interest on capital, salary, commission, etc. All those things you have to add. You will get one aggregate value. So for each partner you have to calculate, and then you have to calculate the ratio of the aggregate values, so that is known as ratio of appropriations. Then the aggregate amount is calculated for each partner and the profit is distributed among the partners in the ratio of appropriations. Very important. So this is often asked in MCQs. Lot of questions have been asked in previous examinations. This question is often asked again and again. This is examiner's favorite question, so frequently asked question, so very important. Okay, just remember this. When interest on capital is an appropriation but profit is not sufficient. So when interest on capital is an appropriation, only interest on capital is appropriation. So when interest on capital is only appropriation and profit available is inadequate following interest on capital, then what you will do, interest on capital of partner is calculated and the profit is distributed among the partners in the ratio of interest on capital. See, remember, ratio of interest on capital is different words, so see the wordings. Okay, see the wordings. Basically it is also appropriation, but the ratio of interest on capital, when the question says when interest on capital is an appropriation but profit is not sufficient, then the profit is distributed in what ratio, means you should not write ratio of appropriation, because ratio of interest on capital is different, ratio of appropriations is different. You will lose marks again here, so they will cross. So remember here, interest is the only appropriation. Okay, so even interest is only appropriation, but you have to be very careful. Like, see, in this previous case it is ratio of appropriations, but in this case it is ratio of interest. Okay, ratio of interest on capital, both are same, but the wording, ratio of interest is different and ratio of appropriation is different. Accordingly you have to read the question carefully and you have to write either ratio of appropriations or ratio of interest on capital. So a lot of students, again this is also favorite question of the examiner, so they want to check you how strongly you have understood the concept. So this is what is the speciality of this beauty of accountancy. So you have to understand everything. Concept should be very clear, not just doing the problems. You should know everything, why you are doing, what you are doing, what you should not do, why you should not do, all those things. Remember here, interest is the only appropriation, but focus on question. Okay, so remember the wordings and remember the particular sentence or wordings are, so all those things are very, very important. Easily you can, students will lose marks here also, so be careful. Calculation of closing capital versus opening capital. So you have already learnt in class 11 how to calculate closing capital. Normally what you used to do, you have to start with you will start with opening capital. So you can see here, opening capital, to that you add additional capital, interest on capital, share of profit, everything you add. So if there are any drawings, you subtract, interest on drawings you subtract, if there is any loss you subtract, then what you get is closing capital. But sometimes lot of questions are there where they will not mention they will give closing capital, then they will ask you to calculate interest on capital. So interest on capital is always calculated opening capital. So again, students should be very careful. So what they have to do, they have to calculate opening capital first. So opening capital first they have to calculate. So what you have to do, just the reverse thing. So you have to start with closing capital. Whatever you used to add you have to subtract, and whatever you used to subtract you have to add. See, exactly reverse of that. So here I have started with 1 lakh. So we have reached at 1,80,000. So opening capital was 1 lakh, so we have reached at 1,80,000. So we have started with 1,80,000 closing capital and we have reached at opening capital 1 lakh. See, this is how we have to do, this is how it is. So the concept should be very clear. So it is very simple thing, but lot of students even don't understand this. There are some students, they don't get this concept very easily. So remember this steps and how it is added or subtracted. So this is what is the thing. So a very basic logic is involved here, so focus on this. Interest on partners capital versus drawings. Interest on capital is allowed on capital for the period capital remains in business. Okay, thus interest is not allowed on withdrawn capital. Capital withdrawn is debited to capital account itself. So it is considered for interest on capital only. So we calculate interest only on capital which is existing, which the firm is using for that particular period. So that is why capital withdrawn, on the capital withdrawn we will not pay interest, that's all. Simply, nor drawings normally means drawings against profit, means drawings of amount against profit for the year. The amount withdrawn against profit for the year is debited to drawings account. Remember this again. So capital withdrawn is debited to capital account itself, whereas amount withdrawn against, so drawings are debited to drawings account. Interest is charged on drawings if the partnership deed provides it or partners agree to it. So be careful. Okay, so it is very important thing. See, little things, but very important. So drawings by a partner may be broadly divided into two categories: irregular drawings. So they are also known as ad hoc drawings. Ad hoc means whenever they want, they will take the money. So like one amount in January beginning, one amount in February beginning, one amount in November or somewhere. So first, second, third, or somewhat. So they will normally the dates they will have, so that the calculation is easy. They will give either first of the month or last of the month or middle of the month. So something like that. So so that the calculations are easy for you. So you have to be very careful. Drawings of same amount or different amounts. Either the amounts may be same amount, like let us say 20,000, 20,000, 20,000, but or different amounts like 10,000, 20,000, 30,000, like that, at irregular intervals. This is also very important. Irregular means sometimes at the first of the month, sometimes at the end of the month, sometimes at the end of one particular month, after 2 months, after 3 or 4 months, something like that. Whenever they want, they will take out. So that is known as irregular drawings. What are regular drawings? Regular drawings means drawings of same amount, regular intervals. Like you pay salary to employees, at the end of every month or beginning of every month. Similarly, even the partners will take out money at regular intervals, maybe at the beginning of every month, or at the end of every month, at the beginning of every quarter, or at the end of every quarter. So, and the amounts also will be same, ditto. Not even 1 pi should be different. So everything, the amount should be exactly same, and the interval also should be exactly same. So they are known as regular drawings. Methods of calculating interest on drawings. Product method is used to calculate interest on irregular drawings. So if the drawings are irregular, product method is used to calculate interest on drawings. So average period method is used to calculate interest on regular drawings. Amount and interval should be regular and uniform. A separate class has already been taken. So separate class will be taken solely to demonstrate calculation. So there is a separate class in which I have explained to you how to calculate interest on product method, how to calculate outstanding months, how to calculate average period. All those things briefly, clearly I have explained to you. So I have done around 4 or 5 problems. So I have explained to you very clearly. Please have a look into that and pay focus. And if you do, there are a lot of problems in your book, maybe around 40-50 problems are there, but you don't have to do all the problems because it is mere waste of time. You have got lot of other things to do. If you just understand how to calculate interest on product method and average period method, how to calculate how to find out average period, that is more than sufficient. So just do 3 or 4 problems, more than sufficient. So then maybe in the normal time, when casual time, when you are solving more question papers or something like that, practice will get a hands on. So don't waste more time in particularly calculation of interest on drawings. Okay, lot of problems are there, so don't waste more time. Product method. This is the standard formula. Interest on drawings is equal to total of products into rate of interest upon 100 into 1 by 12. So this is a master formula. Remember this. So what is total of products? what is rate of interest. I have explained to you everything in the practical problem. So average period method. So this is average period method. So interest on drawings is equal to total amount of drawings made during the year. So into rate of interest per annum into average period divided by 12. So average period is number of months from the date of first withdrawal to the end of the year, number of months from the date of last withdrawal to the end of the year divided by 2. So again, average period I have explained to you very clearly. So how to find out average period? So this has become, I have simplified you. So I have made your life easy by explaining the concept very clearly. So I have done practical problem, actual problems on the screen, so easily you can understand. So if you find it helpful, give a thumbs up and subscribe and share. So just remember average period. Okay, all the problems, there are so many problems, you have to just remember the average period. Or some students they find it difficult, so what they can do is they can just mug up all these things like the average period, and they can just simplify the problems. It's very simple. So only average period will change. So here only average period will change, everything will be same. Interest on drawings under average period method, average period will change, everything else will remain same. When the drawings of fixed amount are made half yearly at the following time, like see, a partner would have withdrawn at the beginning of the year and after 6 months, that's all. So he would not have withdrawn any amount, and sometimes he would have withdrawn after 3 months and again after 6 months, that's all. One partner might have withdrawn only at the end of 6 months, that's all. He would not have withdrawn anything. So then you have to use just how to calculate average period. So very simple thing. So again, starting from July, say starting from July to March. So if the fixed amount is withdrawn during last 9 months, okay, during 9 months, so only 9 months. During last means say from starting from July up to March. So the partner has started withdrawing on July, August, September, like that. So for the last months, maybe at the beginning of month, middle of the month, end of the month. So again, how to calculate outstanding average period. So say October to March, last 6 months. Say some partner might have withdrawn only at the end of 6 months. So then or something like that. So at the beginning of each month after 6 months, and at the middle of each month after 6 months, or at the end of 6 months before 6 months, that is after 5 months he has withdrawn. So if the uniform amount is withdrawn in first 6 months, interest is calculated for full year. See, very important. Okay, if the uniform amount is withdrawn in first 6 months, interest is calculated for full year. So very important. So this is also an abstract from Grewal's accountancy book. So very important, just remember this. Whereas when various dates of drawings are given, you have to use product method. Simply use product method. When dates of drawings are not given, sometimes what happens, date of drawing is not at all given. Only they would have mentioned how much money is withdrawn, but they would not have mentioned when it is withdrawn, what is the date. They would not have given any indication. So what you have to do, what is the option? Just calculate for 6 months, that's all. Okay, so you have to just calculate the interest for 6 months. Everything will be same, just the time period you have to use it as 6 by 12, that's all. So when fixed amount is withdrawn on the first day of every month, interest is calculated for an average period of 6.5. So 6, 5.5. So these are the numbers. Just remember the numbers and keep doing the problems. So very simple aspect. Rectification of errors and omissions. Errors and omissions in the past financial year rectified in the current year or a past adjustment. What happens? Some errors, they would have passed some errors. They would have done some errors in calculating, preparing the final accounts, and the partners capital accounts might be will have variations. That actual would be something else. So those are known as past adjustments. So some errors would have happened. Maybe you did not have paid interest on capital, or you wouldn't have paid more, or you would not have taken interest on drawings. So basically this is rectification of capital. Simple, that's all. This may be rectified by passing single journal entry for the net effect, or by passing journal entry for each adjustment. So there are two ways. So two type of problems. One is you might be required to pass a single journal entry for the net effect, or by passing journal entry for each adjustment. There are two types of problems in this. So again, so probable errors. What are the probable errors that can happen? Omission of interest on capital, omission of interest on capital and drawings also. Interest on interest charge are allowed at higher or lower rates. So interest on capital, drawings against profit error. So something like that. So distribution of profit in wrong ratio. Instead of dividing into equal ratio, you might have given in 3:2:1 or something like that. Omission of interest with inadequate profits. Analytical table. Easiest simple method for rectification entry. So this is a standard table that have been using from several years, has been used by several years. So the different versions of books have changed, but the format is same. So particulars, so you can just carefully have a look at it. So A's capital account is there, B's capital account, current account is there, and firm's profit and loss adjustment account is there. See, debit credit is there, debit credit, debit credit, debit credit, debit credit, everything. So very carefully, this table is very easy. You have to remember this table. Easiest simple method for rectification entry. In case of fixed capitals, partners current accounts are debited or credited. Simple, that's all. So remember this table, how to prepare this, and accordingly what you have to do. Single adjustment entry. In case of single adjustment entry, you have to reverse or undo the wrong adjustment. Credit for wrong debit and vice versa. So you have to credit for wrong debit and debit for wrong credit. Simple, that's all. Do the right adjustment. Then you have to, what you have to do, say step number 2, do the right adjustment. Suppose if you are not given interest on capital, you have to give interest on capital, that's all. So distribute the net adjustment. Now net adjustment you have to see. What is the net adjustment? That you have to distribute to the partners, that's all. So just remember undo, do, redo. So 3 steps you remember: undo, do, redo. Pass single adjustment entry for the last part. So columns for all partners and firm should be prepared. Remember this. When adjustment journal entries are passed, in place of one adjustment entry, several journal entries may be passed. Okay, analytical table is not prepared. So in this case, they may ask you to prepare several journal entries in place of one. So journal entries are passed for each error or omission by debiting or crediting profit and loss adjustment account. Remember, it is profit and loss adjustment account. It is not profit and loss appropriation account. Again, here lot of students commit a mistake. They write appropriation account instead of adjustment account. Corresponding credit or debit is in the capital or current account of the partner. After passing the entries for adjustment of each error and omissions, profit and loss adjustment account is closed by debiting or crediting partner's capital or current account as the case may be. Okay, ultimately the net adjustment. So in this case, see, in this case what you will do, all partners single adjustment entry will be passed. So okay, single adjustment entry, capital accounts will be debited or credited, but here closed by adjustment for each and every profit and loss adjustment account is closed by debiting or crediting partner's capital account as the case may be. So profit and loss adjustment account is relevant here, is very much relevant. So lot of entries will be passed through profit and loss adjustment account, but here not all the entries will be passed through. So last only one entry will be passed through single adjustment entry, so through profit and loss adjustment account. So when you do the problems, it will be more clear. So work out the problems, then it will be more clearer to you. So after passing the entries, this is done. So guarantee of profit. A partner or partners may be guaranteed minimum profit from the business, which may be guaranteed to an existing or incoming new partner. So what happens, there may be one partner who is a very talented person, so you don't want him to leave the firm, or he is willing to join the firm or something like that. So then what you can do is you can guarantee him a minimum profit so that he remains in the business. So then all what the guarantee will be given by all the partners, may be given by the all partners or one or more of the existing or old partners in an agreed ratio. So again the firm, so a guarantee may be given by the firm. So when the guaranteed partner share of profit is more than the guaranteed profit, his actual share of profit is given to him instead of guaranteed amount of profit. Actual profit or guaranteed profit, whichever is more is given, at least guaranteed profit should be given. Deficit sharing. If share of profit is less than the guaranteed amount, difference in the amount of profit, that is minimum guaranteed profit minus share of profit of the guaranteed partner, called deficit, is borne by the remaining partners in the agreed ratio. And where the agreed ratio is not given, the deficit is borne by them in their profit sharing ratio. There are two ratios. Okay, one is agreed ratio and one is profit sharing ratio. If they have mentioned what is the agreed ratio in which they will share their deficit, that agreed ratio only you have to consider. If it is not mentioned what is the agreed ratio, then profit sharing ratio you have to consider. That's all, simple thing. So again students will come mess up here, so they will not understand and they will do mess up. They will mess up finding out the amount. So the difference or deficit is derived from the share of profit of the partner or partners who has or have guaranteed minimum profit and is added to the share of profit of the guaranteed partner. That's all. So you will take from the partner who has sacrificed, he was guaranteed, and give it to the guaranteeing partner. That's all. Guarantee given by the firm to the partner. Sometimes what happens, firm may guarantee a partner. The firm will say that the firm will pay minimum profit to a partner. So the guaranteed partner gets the guaranteed profit from the firm. The deficiency is borne by remaining partners in their profit sharing ratio. So ultimately the profit sharing ratio, they will share the other profit. So first they have to give to the guaranteed partner, and remaining whatever is left they have to share among themselves. That's all. Check illustration 60, 62 and 62. All the three you do together to find the problem solved in two different ways. See, this type of problem you can solve in two different ways. Pay attention to illustration 62 in case of any doubt, because problem number 62 they have done in both the ways, method 1 and method 2. So it will be clear only when you do the problem on your own. So just focus on problem number 60, 62 and 63 illustration, Grewal's book, latest edition, that is 2025 edition, illustration 60, 62 and 63. Focus on this. Loss making firm guarantees profit. When a firm makes a loss but has guaranteed profit to one of the partner, the profit is given by the remaining partners out of their capital account. So what happens, the firm is already making a loss, but they guarantee that a partner will get minimum profit. So what to do? So remember to both credit double the amount. So you have to credit double the amount. So and debit single the amount. So what happens? One credit and one debit cancels out, and only one credit remains to the guaranteed partner. Simple, that's all. So single amount. So this is very again a very important thing. So two problems may be there. So solve these problems, and again this type of problems are important. Okay, so just focus on this. Minimum earnings guaranteed by a partner to the firm. A partner may guarantee minimum fee or specified amount or earning that the firm shall earn by his efforts, and shortfall if any is borne by the partner guaranteeing the fee or amount specified. What happens? A partner may say, so I will join the firm, so I will guarantee that if I join the firm, the earnings of the firm will be very high. So in case if the firm doesn't earn, I will be responsible and I will pay from my pocket. So simply in that case, simply credit the profit and loss appropriation account with a debit to the guaranteeing partner. So again do this problem, so you will understand it more clearly. It's a very simple thing. So whatever shortings are there, you have to just credit it to the profit and loss appropriation account. That's all. Minimum earnings guaranteed by a partner and minimum profit guaranteed to a firm. So both the things are there. So both the things may be given simultaneously. A partner may guarantee minimum earnings guaranteed by a partner, minimum earnings may be guaranteed by a partner, and minimum profit may be guaranteed to a partner also. Both the things. So what you have to do, you have to do both the things. So there is one problem which is the last problem of Grewal's fundamentals of partnership firm. Last problem, illustration. So basically this will focus on this. So again what you have to do, a partner may guarantee, so that what you have to do, simply credit the profit and loss. First you have to do that, then afterwards what you have to do, you have to share the profit. That's all. So once shortage of profit is made good by the partner, the profits are shared as usual, like guaranteed partner is given the guaranteed amount by the sacrifice by remaining partners. Remember, learn this by heart. Okay, so all these points you have to learn it by heart so that you don't forget, because as the classes progress, so you will forget. Again you cannot do the entire lesson, no, so again you cannot do the entire chapter. So a lot of time, see why I am doing all this, I would have taken each and every lesson, each and every, each and every problem I would have done detail, like lot of, then what will happen? So it will take lot of time, a lot of efforts for you and for me also, and ultimate result will be not so effective. So this method I have adopted for your effective learning. That's all, nothing else. List of important accounts you should know: profit and loss account of partnership firm, profit and loss appropriation account of partnership firm, partners loan account, partners capital account combined for more than one partner, analytical table to find net effect. Importance of illustrations. Okay, try to understand and do the problems on your own. Facilitate self-learning. So try to understand and do the problems on your own. Okay, so try put that habit now itself. Importance of exercise questions. Test your understanding by working out the problems based on your knowledge, understanding, and check the answers. That is why exercise questions are given, not to overburden you. So be careful. So important questions for practice from Grewal's latest book. Okay, 2025 edition. Illustrations. Illustration 17 page 1.28. Illustration 18 page 1.31. Illustration 19 page 1.31. Illustration 26 page 1.40. Very important problem for practice. This is likely to come in the internals by if your teacher is very strict and she wants to motivate you or keep you active. So he or she will give problems from here. So illustration 29 page 1.43 very important. So illustration 31, 32, 34, 36 page 1.46, 1.49. so all these are interest on drawings. Don't waste much time on interest on drawings. If you have understood the concept of average period method, then it is over. So you can just solve 3-4 problems, more than sufficient. So you have got so many other things to learn. You have got 3 books to learn, and so many concepts are there. Each and every problem is different. So many things are there. Illustration 39 page 1.52. Illustration 40 page 1.54, illustration 43 page 1.58, 45 page 1.59, illustration 49 page 1.62, illustration 51 page 1.64. very important question for practice again. Okay, so likely to come again and again, appear in the question papers again and again. Figure illustration 53 page 1.66, illustration 55 page 1.69. important questions for practice again. Illustration 56 page 1.7, illustration 58 page 1.71, illustration 60, 62, 63, so 64 and 67. so all these exercise problems from number 20 to 91, page 101 to page 114. see, so many problems, all problems. See, doing more and more problems will make you perfect and quick. Okay, I have often seen that students, they complain that the paper was very lengthy, we could not complete the paper on time. What is the issue? The issue is the speed. They have not conquered the speed. So if you have conquered the speed, you can do it. So that is the only remedy. You have to work out more problems. Obviously you have to focus on other subjects also, but gradually, if you start now itself, maybe from the day one, if you start now itself, you can do this and you can achieve this target. Okay, so be careful. I will not be solving all textbook problems, dudes. You know that. Let me know in case you need any explanation, any of the concept discussed above, or any specific problem in this comment. So till now I have not received any request. It is good for me. So even I will save my time, and I am happy that you don't have any doubt. I will explain in my free time in my virtual classroom. So even I will be busy. So I will be having online classes, offline classes. I will be engaged in so many other assignments. So please have patience. So if you have any doubts, if you have put a note asking me to help in any particular problem, you should have some patience. Okay, I also take regular online tests for limited students. I don't mess up. I don't have any app or any website or anything like that. So maybe gradually I will do that, but as of now I have not planned for any such thing. So we'll see what happens in the future. Self-learning is the best learning. Students should try to understand concepts on their own and seek help from teachers for difficult concepts. As far as I am concerned, you can ask me any stupid doubts. Even if it is very stupid or very silly doubt also, you can ask me. You can ask me again and again. So I am happy to help you. So but again, in my available time, free time, so I will try my level best. So for that purpose, I will not just postpone things, because I see there is a saying, if you don't get time during the day, steal it from the night. So there is a saying by important one of the important authors, was, I think I don't remember his name, so it must be Abraham Lincoln or someone, who said, if you don't get time during the day, steal it from the night. So I am recording this lecture at middle of the night by 11 o'clock. So I am putting lot of efforts just to help you out. So I am so you can have a look at my profile. You can know me, why I am doing all this, so you will get to understand. So I don't want to exaggerate things and let you know. So but if you really want to understand concepts and you want to learn more and more things, if you want your concepts to be clear, achieve something in your life, please feel free to contact me through a comment in the comment section. So note to students, most of the schools finish the syllabus by the end of October, so be proactive and learn systematically from today. So there is already a circular which has stated that 2026 exams, final exam for class 12 CBSE will start from February 17. So if you have read the article, please read the article. I don't know whether you have come to know about that. So February, the schedule has already come that class 12 exams of class 12 exams of CBSE will start from February 17, 2026. So this year ISC exams started started on 7th February. Similarly, next year even ISC exams are likely to start in February itself, maybe beginning of February itself. So be proactive. So what happens is as gradually as the teachers speed up to complete the portions, nothing will enter into your head, and it will take a lot of time for you get confused because of the stress, because of the assignments, because of the project work, all these things. So plan from now itself, dude. So friends, be careful. Okay, so this is a heads up class. I told you, this is a heads up class, so please be careful. Okay, so slow and steady wins the race. So you have to be very proactive. Don't be lazy, don't postpone things, don't procrastinate. So be careful. Okay, so there are millions of teachers and different methods of teaching as well. I know that there are different teachers, lot of teachers are there are better teachers than me, lot of teachers are there, and similarly everyone have their individual traits and skills. Okay, so I don't say I am very best, I am very good or something like that. Similarly, students understand in different ways. Some students might understand me, some students might not understand me. So some students might understand some other teacher. So there are so many things. The ultimate goal of every teacher is to make the students succeed ultimately. So my sincere regards and best wishes to my fraternity, my colleagues, or my fraternity, that is all the teacher professionals. So my sincere regards and best wishes to all of them. Next class will be doing calculation of interest on drawings made easy, simple problems on the computer screen. I have done already done that. So this is the second time I am taking a virtual class, because the earlier class there was a lot of disturbance in the audio, and it was making lot of irritating voice. I came to know, I was not knowing because I was in a hurry. As soon as the class was taken, I just uploaded on YouTube without verifying it. So I am very sorry for that. So then I came to know that something has happened. Once one of my students was watching it, I came to know that there was a lot of irritating voice. So then I had to delete it, and again a new version has been created. So sorry for the inconvenience. So this is please let me know in case you find any difficulty. Please let me know, because I will not be checking everything and all, because I will have lot of other things also. So it will take lot of time. So completing taking the class, again checking everything, so it will take lot of time. So even if I committed any mistakes, if I have done any errors, please let me know. Okay, so I will be very thankful to you, I will be very grateful to you as well. Assignment questions. So dear friends, take down these questions as assignment. Maybe you can take the screenshot of each of these questions. I will just give 5 seconds for each. So this is one question, this is another question, this is another question, this is one more, this is one more, this is another question. One question on one screen. Okay, so one question on one screen. There are no I have tried to put one question only on one screen, so there are no two parts. There is only one part in each question. So again this one, next question. So next class, some very important questions from fundamentals of partnership I will be solving on the screens. Numericals worked out on the screen only for subscribers. So what I have noticed is lot of viewers are watching without subscribing to my channel. I don't know what is the motive or why they are doing that. So maybe to demotivate me or something like that, I am not sure. So they don't want to spread, because there may be so many issues and concerns I am not aware of. So please help me out. So I am also very smart. I know what to do and what are the remedies for that. So I have taken out different, because I know what is the best way to deal with such people. So please subscribe if you are not subscribed, if you are genuine viewers, and if you really want to learn the subject. So and if you are not genuine, then I don't There may be question like even the people who are not subscribers may or not may not be genuine. So that is another thing. So but now, as of now, I have planned this particular thing. So that this is just to give you an heads up. Like please like and subscribe and share to a lot of other. I want more and more students to be helped. If these classes are helpful, then I will help them. So if they are not helpful, why should I help? Why should I waste my time? I don't, because I can focus on other aspects. I can focus on online classes, offline classes. So other aspects I can take. I take classes up to MBA also. So why should I waste my time on virtual classroom? So recommended reference books for CBSE and ISC. How to start and finish studying. How to start and finish studying. Have a bird's eye view of entire syllabus. Study each topic thoroughly. Never ever resort to shortcuts in study. Okay. So work out examples, illustrations, exercises. Repeat until you understand. Practice exam questions. Practice mock exams. Simulate exam conditions and practice. So this is how you have to do. Remember, there is no shortcut. Okay. You have to practice more and more. You have to work out more and more. Then only you will get the speed. Otherwise, you will not get. Remember, you will never conquer the speed.